Hello, my name's Elmley Delacour and I'm the Communications Manager at the AIC. Earlier today, I caught up with Sue Noffke, Manager of Schroder Income Growth, one of the AIC's Dividend hero investment companies, to discuss whether it's time to reconsider unloved UK domestic stocks and her view on the UK market ahead of Brexit.
UK equities as a whole have been pretty unloved for the last 3 years or so, really since the time of the UK's EU referendum. And it's the domestic set of companies within what is a very international group of companies quoted in the UK stock market that have been most heavily hit by that derating, that shunning of investor appetite for UK equities. And because of that, the valuations here are very appealing. And these are the types of companies that we've been doing a lot of work on over the last couple of years to really kick the tires about their prospects, the upsides, but also to consider what the downsides could be. And we've become increasingly confident about the prospects, given the valuations that we see today, to increase our portfolio's exposure to this area of the market. Ahead of Brexit is a very interesting concept because we've been talking Brexit for some considerable time, probably 3.5 to 4 years, and I think we're going to be talking Brexit and implications for some time into the future. What I see in terms of the investment opportunities today within the UK equity market are coloured by Brexit. So it's around the effect of the exchange rate, how that impacts both international and domestic companies, whether they're importers or exporters, what that means for interest rates, what that means for consumer confidence, what it means for valuations. So when I think about Brexit and the opportunities and confusion that brings, it's really about unstitching that and looking through to the underlying fundamentals of the businesses and to look for where opportunities are mispriced because of that confusion and because of that uncertainty. And it's to embrace those opportunities rather than to shun them. Within UK equities, I see the biggest opportunities around some of those domestic companies. So these are ones where it's the UK consumer at the forefront. If I think about the opportunities that I've bought within the last 12 to 15 months within the portfolios that I run, it's the likes of domestic retailers such as Tesco. It's got a strong story of a turnaround under new management that the market really hasn't priced appropriately, in my view. And I think there is a good catch-up story to be had there. If I think about house builders, where activity levels are definitely suppressed by the level of uncertainty within the consumer's mind as to what the path for Brexit and the future might bring. Any lifting of that Brexit fog, as I like to think of it, will lead to a pickup in activity, and that should be very beneficial for the likes of Crest Nicholson, which is a house builder company within the portfolio. And lastly, I also think about the leisure companies. So whether that's Whitbread as budget hotels, quite an affordable treat to go away for a weekend, or whether it's Hollywood Bowl, which again is a very affordable family or night out for a group of friends. These are companies that have good growth prospects that I don't think are being valued appropriately for that growth in today's uncertainty. I'm very proud that the investment trust that I run has dividend hero status after 23 years of consistently increasing its dividend. The ways in which I've been able to ensure that the trust has delivered always increasing dividends, and I want to ensure that it continues to do that into the future, is around using the levers at my disposal from the investment trust structure. So it means I don't have to pay out all 1 year's dividend to investors at one go. I can tuck away in the good times into reserves sufficient dividend to ensure that in tougher times I can meet investors' dividend expectations into the future. We've done that in the past. So round about the global financial crisis, cumulatively, UK equity dividends fell by about 15% over 2 years. We also use those reserves to ensure that dividends to investors continue to keep rising. And I want to make sure that whatever the future holds, we're in a position to do that. Currently, we have 11 months dividend held in reserves. That's a very strong position and I think very comforting for investors in the trust.
It was great to talk to Sue earlier about why it could indeed be time to revisit those unloved UK domestic stocks and to hear about how she uses the full range of tools in the investment company structure to pay a consistently growing dividend. Thanks for watching.